Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1299A, and today's date is June 6, 2017, and the title of the episode is The Last Stage of Popping the Bubbles Has Begun. It's only a matter of time. Let's get into the economic collapse financial news. Now, we're starting to see a lot of problems in the economy, and it's getting worse. We've been looking at retail, and we're seeing that retail stores, they are closing left and right. Bankruptcies are happening, and it's not just in the retail industry, it's happening in every single sector. But in the retail industry, it is really noticeable. And Macy's, they're saying that their profit margin, well, it's not going to be where they think it's going to be. It's going to be about 60 to 80 basis points lower. And remember, they made this forecast back in February, and they're starting to realize, well, things aren't going to be as good as we thought. And a lot of stores are starting to look at this and say, okay, yes, we had a projection. We projected it out for the rest of this year, but it looks like we're not going to hit any of these goals, and things are a lot worse than we originally thought. Now, remember, prior to 2008, going into 2008, we started to see a rise in consumer and business bankruptcies. And of course, they skyrocketed right after the market fell in 2008, going into 2009. And we're starting to see the same exact thing happen once again. We see consumer and business bankruptcies, well, they're rising again after they've been declining since around 2010 to about 2015. And this is not a good sign. Bankruptcy filings for businesses, from large corporations to tiny sole proprietorships, well, that started back in November of 2015. And at first, it was the energy bust, and people, well, it was the energy sector. We could see what happened. Prices came down, and they couldn't operate, and things started to fall apart. But the bankruptcies of these energy companies, they have tapered off. And what we're seeing right now is that the bankruptcies in the retail sector, in consumer sector, well, they're starting to pick up the slack. So really, here we go again. Total U.S. business bankruptcies in May rose by 4.7% year over year. And there were about 3,572 filings. And this is according to the American Bankruptcy Institute. That's up 40% from May 2015 and up 10% from May 2014. And there's another concern. Bankruptcy filings are highly seasonal. They peak in the tax season around March or April, and then they fall off. So the decline in April after the peak in March was within the seasonal pattern, but over the past years, filings dropped in May, but not this year. This year, they jumped. And what we're seeing is total U.S. bankruptcy filings by consumers and businesses in May rose by 5.3% year over year to 69,000. Consumers at risk of seeking bankruptcy protection are those with insurmountable piles of debt and a stagnating or declining real income. And we saw this back in 2007, 2008. Now, the amount of debt is driven by student loans, auto loans, revolving credit, like credit cards, and we can see, and also medical bills and treatment, that's all plays into this. Normally not mortgages. Mortgages, people say, okay, you know what, I can take a loan or an equity loan and I'll be fine. But normally this happens with student loans, auto loans, and the things that we mentioned. And what we're seeing right now is that there's a lot of this debt. Credit card debt is around $1 trillion. It is just one notch below the peak during the financial crisis. Auto loan balances outstanding have surged 36% from the pre-crisis peak in 2006 to $1.12 trillion. And student loan balances outstanding have surged 180% over the same period to $1.44 trillion. This amounts to over $3.5 trillion plus medical debts, and we're starting to see bankruptcies increase, where in the past they've decreased during this period. So it looks like things are repeating what we saw back in 2008, 2009. It looks like we're back in that same situation. Now, we understand that the budget, well, that only takes us to September 30th, that $1 trillion budget they passed. We understand that the debt ceiling is coming up and the government is running out of money, which means there's going to be a shutdown. It really doesn't affect the people, but it looks really, really good on the corporate media and people get all scared. But all your services and everything, well, they don't cease to exist. They continue on. But we see House Minority Leader Nancy Pelosi. She is out there and she is saying that they're going to use the debt ceiling as leverage to stop Trump's tax proposals. And at this point, looking at Trump and looking at his actions, I don't think he really cares, because he understands that the economy is not going to last the way it is right now. Even if the debt ceiling is raised, if it's not raised, it makes no difference. The amount of debt and the amount of tax receipts coming in, it just can't work anymore. And he realizes this. So if the debt ceiling is raised, we're just going to add more debt. More people are going to lose their jobs. Tax receipts coming into the government will not be able to support the debt. If the debt ceiling is not raised, well, guess what? Government is shut down. The longer it goes, well, the more the government is not spending. And what it means is a lot of departments will start to close slowly but surely. And it's a waiting game, because no matter which way we look at it, the economy is going to collapse. And we know that these individuals in government, it looks really bad if they keep something shut down for a long period of time. And yes, she might be saying that she's going to use this as leverage, but guess what? Just like the Republicans, they will always give in and they will raise the debt ceiling. And this is exactly what he wants them to do. He wants the debt ceiling raised because he realizes, he understands that he needs to continually add more to the debt. We need to blow up these bubbles. We need to bring down the system. His strategy is not to repair the economy that we're in today. His strategy is to collapse the economy that we're in today and then rebuild it through the transition. This is what he's been preparing for. Now, we can see that the central bankers, they are out there trying to make it look like the economy is doing fantastic. And they want to do this because they're on the other side now, looking at Trump saying, okay, we need to bring this down before he does because we need to control the narrative. And the way the central bank needs to do it, yes, can they just push a button and just have everything come to an end? Of course they can. But that wouldn't look natural. That wouldn't look like a natural crash. So what they need to do is they get the insiders out of the stock market. They bring in the retail investors like the millennials, which now we see on the corporate media. They're out there saying that since the financial crisis has ended about a year ago, millennials who were a little nervous about investing, well, they're looking at the market once again. And it looks like maybe they'll start investing in the market because they can see that it's stable and it continually moves up. And it looks like maybe now it's time. Now, this is an article which they're putting out there, and this one's on MarketWatch. It is to convince everyone that everything is fine in the economy, to get people into the stock market. So the insiders can pull out, the retail investors to come in, because they know the bubble is about to pop. This is what they do in real estate. Once all the speculators are out there and they have the inside information and they realize the housing bubble is at its maximum, what they do is they start selling off their properties, and the retail investors come in and they start purchasing tons of them, thinking that the market's going to continually rise, and then all of a sudden everything comes crashing down. So we are at that point where we're going to see everything start to fall apart. Now, we need to remember something very important here. The central bank, they really don't have any more tools to keep this economy going. Yes, they can use stimulus. They might pass stimulus off from country to country. We had Mark Zuckerberg out there talking about universal basic income, where they're going to just give cash to individuals. We know this is not going to work. This is going to cause inflation, which means that there's going to be more currency in the economy, which is going to devalue the currency, and it's going to cause more debt. The tax receipts coming in, will not be able to support this, and eventually this will crash the economy. Yes, it will work for a short period of time, very short, and then things will start to unravel. So what do they have left? Well, they have nothing left. And this is the major problem. Now, what I see happening here is when things start to fall apart, we're going to see it happen on the outskirts around the world. What I mean by that, we're going to see it happen in many different countries. Of course, we're going to see it in the emerging markets first, the smaller countries. It's going to head to Europe, and then eventually here to the United States, just like we saw back in the Great Depression. Now, what's very interesting is South Africa, well, they just plunged into a recession. So we're starting to see financial institutions continually fail. We had Deutsche Bank, which had to be bailed out. We had Italian banks that had to be bailed out. We see Banco Popular in Spain, which needs a bail-in or some type of investor to step in. We see Home Capital in Canada, which is a complete disaster. And now we have South Africa that just entered a recession. And we can see the GDP numbers are way down. They tumbled down to about 0.7%, which is very interesting, which is very close to the United States GDP numbers. And we can see that it's already starting on the outskirts, and it will work its way in very slowly. Now, the central bankers realize this, and we have to remember something very important. We are now coming off of the oil dollar system, which is the petrodollar system. Now, why Trump is doing everything behind the scenes, and actually a little bit later in the next report, I'm going to explain why the corporate media might be catching on right now about what he's really doing. What we see happening right now is he's working behind the scenes trying to get everything set up. He's looking at the land, reviewing the land that the president's put aside. He's looking at the natural resources. He's looking at oil, offshore drilling in Alaska, because he realizes once we come off the petrodollar, guess what? The oil that we're receiving from the Middle East is going to freeze up, just like it did back in 1971. When we were going on the oil petrodollar system, well, we couldn't get oil in there until the deal was made, and this is why the corporate media and the government was out there saying there were shortages. No, it was because they were coming off the gold system, moving on to the petrodollar system, and everything wasn't ironed out. And we see we're on the back end of this. Now remember, trade, he said, is very important. Yes, we need to have some type of trade. Why? Because what we do today is countries, they receive the dollars, they use those dollars to buy our goods that we manufacturing. And manufacturing has left this country. So we have less to give these countries. And it wasn't like when we first went onto the system where we had many, many things to give these countries. Now we have a lot less because all manufacturing has left this country. So when we come off the petrodollar system, guess what? These countries don't need to hold the dollar anymore. They're not going to be purchasing our goods with the dollar anymore. So they will be off the dollar system, which means we're going to need to produce and trade with other countries. And this is what is being set up right now. It might be hard to see, but this is the plan. This is why trade is so important. This is why joining the Belt and Road is so important. He unraveled the TPP, this globalist system that they wanted to keep the system going and bring the country down to a third world nation. He removed us from the Paris Climate Accord because what is happening right now is he understands, and those individuals in government that are behind him understand that this system, it's coming to an end. And everything has to be in place. Now, we're going to go through a transition period, just like we did coming off the gold system, going onto the petrodollar system. And many people think, wow, it was great then because, my house price went up, my income went up. Well, what you didn't realize was there was so much printing of money. And as we came off the gold standard, the dollar devalued. That's why you saw inflation the way you did. That's why they raised the interest rates the way they did to try to control it. Now we're on the back end. Interest rates very low, wages going down. We don't see inflation right now. We will, because the dollar is going to devalue quite a bit when all these countries don't need to hold on to the dollar anymore. So we're on the back end of all of this. we're going to go through this transition. The corporate media is going to be out there telling you how terrible everything's going to be. Everything that he's doing is going to be awful. It's not going to work. This is the mouthpiece of the deep state. This is what the corporate media does. But this is in preparation for the new system. And we're going to go through this transition. This transition is going to be difficult because all those products that we've been receiving from China, the oil that we've been receiving, food products, that's going to come to a screeching halt until we get onto this new system. So there's going to be a time period where the entire economy will not be operational. And this is what we are getting prepared for. This is what we've been talking about. Food, water, cash on hand, gold and silver to protect your wealth, a weapon because people are not going to be prepared for what is happening. This is what we've been talking about all along. And we are on that other end where we're coming off of this petrodollar system. And it's not going to be easy. Remember, we have all this debt. And all these countries around the world are going to say, okay, it's not backed by oil anymore. The dollar is not backed by gold. It's worth nothing, and there's debt. There's so much debt attached to it. Why do we want to hold this? And they're going to take it and say, we don't want this anymore. And all those dollars are going to flood back to the United States, and we're going to see inflation, which is a lot of currency in circulation and the devaluation of the dollar. So get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.